Well, hello, and thank you for joining me again. My name is Kay Mortimer. I'm an enrolled agent, and I'm going to go right into the topic of this particular series. We're considering year-end tax planning made simple, and this is part one. We're going to talk a little bit about income and about some strategies that may or may not apply to how to minimize some of your income. First thing I wanted to mention is obviously there are certain forms of income that are going to be static, that you really can't change. Your W-2, whatever you've worked for your employer that is taxable on federal income taxes, is a set amount, and there's not much that you can do between now and the end of the year. Possibly you could put some extra in if you're under your 401k allowed contribution amount, elective deferral amount, etc., etc. You might look at a few of those types of things, but overall your W-2 income is pretty static, and it is what it is. Same thing with, say you took out some money from an IRA or a 401k and you had a withdrawal that is going to be applicable to your 2014 tax return as well. Not a lot we can do about those. But let's consider maybe some other forms of income or ways that you could look at minimizing your income for 2014. Consider this possibility. Perhaps you own stock or you own land or some other investment property that is considered capital gain property. Maybe you're looking at selling that. Maybe you have a buyer, an interested person that's interested in buying that from you. And today, for instance, is December the 15th. Perhaps you wanted to sell that and you have someone that's interested in buying it, and you're looking at, okay, which way do I want to do this? Maybe it's better for you to sell it in 2014. Maybe it's better for you to make the date of sale and the actual transfer of funds occur in 2015, perhaps in January, even January 2nd or 3rd or something along those lines. That's one possible way that you could minimize some income in this year. Now, some of the things you have to consider with that is what is my tax situation in 2014 compared to what my expected 2015 situation will be. For instance, assume maybe you have a child that is 16 years old now, and you're going to have a child tax credit in 2014, but perhaps in your 2015 taxes, because that child will then fall off of that, you will no longer have that tax credit. So you will possibly have a higher tax situation next year, even from just that one fact. Now, that's just one example of some things to look at. Perhaps in this year you have had more income than normal, and in 2015 you know that your income will be less than that. So if you're looking at selling property that could produce a taxable gain for you, whether it be stock or land or some other type of capital gain investment property, those are some factors that could help you determine this late in the game which year maybe you need to have that sold in and which year you need to apply it to in terms of your tax return. So keep that in mind. That's one possible way of shifting your income. Another might be if you're looking at withdrawing from an IRA or some other type of annuity or retirement plan. You might consider, what is my tax situation and the implications of that in 2014 versus the implications of that in 2015. You might look at such factors as my income amount in the 2 years, what it is this year compared to what I expect it to be next year. You might also consider how you need that money and whether you need it now worse than next year. I mean, that's obviously a serious consideration for you as well. And that may or may not help you in terms of income shifting. You just may have to make that decision based on your need, not so much which is better for you or more advantageous in your tax situation. So you might also consider, are you going to be subject to a 10% penalty? If you are 59 years old now and you are not yet 59 and a half, for instance, you may want to take it next year at the point when you are 59 and a half and you would not be subject to the 10% extra penalty tax. That's one way to make some considerations and some judgment calls that you could look at with your tax accountant if you have a preparer, or if you want to discuss with someone about some tax planning strategies, or you want to just consider those things yourself. That gives you some food for thought and discussion about some ideas about possible shifting of income from one year to another if that is more advantageous for you. Keep in mind that all tax planning strategies you want to do are going to be based on the best determination you can make at the time for legal tax benefit and advantages to you. You want to pay the least amount of income tax legally allowed. Okay? So I trust that this brief video about income shifting has been something that you found helpful, and we'll discuss more in future videos as well. Please consider subscribing to my channel, K Mortimer EA, and you can also visit my website at www.kaymortimer.com. Thank you.